Take 5. Goodbye turbulent H1 angst is going for walks excessive over international recession dangers as the year's midpoint approaches. So economic statistics and vital bank communicate will endure watching extra than normal, and there may be masses of that arising. The European Central Bank will host a forum in Portugal, even as a Chinese organization hobby survey and a closely observed U.S. inflation indicator may be many of the fact's highlights. And Russia may be showed in default on outside sovereign bonds for the first time in a century. Here's your have a look at the week beforehand in markets from Karen Stroiker, Sujata Rao and Dara Ranasinghe in London, Ira Yosebashvili in New York and Tom Westbrook in Singapore. 1. Half the picture 6 months studded with fee rises, market turmoil and a war that fueled runaway inflation are giving way to every other half-year featuring more of the identical. Still, H2 might also include turning factors, specifically, top inflation, which can be nearer than idea as financial boom slows and oil expenditures fall. Could recession alerts temper primary financial institution hawkishness? Markets count on U.S. fees doubling by year-end to 3.25% to 3.5%, and notice Eurozone fees rising to 0.75% from 0.5%. Still, stock markets, firmly in bear territory, may also get a respite. History indicates equities typically fall within the run-up to inflation peaking, then rally, Goldman Sachs, NYSE, GS, notes. But that also hinges on organization earnings. Double-digit U.S. and European profits increase remains projected for 2022. Finally, watch Japan and Turkey, primary financial institution doves in a forest of hawks. The latter is vulnerable to triggering a severe crisis. Graphic, central financial institution price hikes in evolved economies. 2. Head for the mountains. The Fed has Jackson Hole, however the ECB has Sintra, its very personal imperative bank discussion board in the foothills of Portugal's Sintra Mountains. The 3-day shindig, starting Monday, may be mainly interesting, given the most important inflation surge in decades and issues of an impending worldwide monetary recession. So, listen even more intently than standard to what ECB leader Christine Lagarde, Fed Chair Jerome Powell and Bank of England Governor Andrew Bailey say on the discussion board. ECB feedback will also be scoured for any perception on a planned anti-fragmentation tool. Separately, Friday, July 1st, will convey ultra-modern euro area inflation readings, which in flip should decide whether the ECB will supply bigger interest price hikes after a quarter-point flow flagged for July. Graphic, UK USEZ CPI 20 US% 20 Euro% 20 CPI, PNG, 3, flaring tensions 4 months into the conflict, tensions between Moscow and the West are ratcheting up once more. EU leaders formally popular Ukraine as a candidate to join the bloc, a formidable geopolitical move triggered through Russia's invasion of Ukraine. Meanwhile, Russian fuel flows to Europe via Ukraine and the Nord Stream 1 pipeline have fallen, after the invasion and Europe's moves to impose sanctions on Moscow. A dozen EU countries are affected and Germany has triggered the alarm degree of its emergency fuel plan. Adding to worries is a standoff over the Russian enclave of Kaliningrad, sparking sparkling warnings from Moscow in the direction of Baltic EU member states. And Russia could slip into sovereign default territory as the grace duration for an interest payment on its worldwide bonds runs out, probable heralding the United States' biggest outside default in greater than a century. Graphic, timeline of key Western sanctions on Russian bond markets 20 image p. C 201,655,988,897,028.png. 4. Data. There's plenty. Fed Chief Powell says the primary bank is not seeking to engineer a recession but is dedicated to containing rate pressures even on the danger of a downturn. A raft of upcoming statistics need to show how the U.S.